Promise. Jeremy Siegel, let's get to him now and talk about the markets. The major average is riding 5 weeks of wins. Joining us now is Jeremy Siegel, UPenn Wharton School of Business professor. And your point, Jeremy, is that the money supply hasn't grown for 2 years. And the one risk to what you think is a pretty good year in 2024, you think 15 to 20% is possible as long as the Fed cuts sooner rather than later, which I think at least implies to me that you think they've gone too far already.
I'm worried they have. I mean, the money supply was, had hit bottom in April, began to increase again, but later in the fall began decreasing. A continued QT may force it to continue to decrease, and you can't really have a growing economy when the M2 money supply is decreasing. I mean, this is the longest period of time of stagnant money supply since World War II. So, yeah, that does give me concern. I could see a real booming year, 2024, if the Fed, resumes that growth of money supply. We need 5% growth of money supply to hit decent real growth and the 2% inflation target. 0% growth of money supply means unemployment, recession, and deflation, truthfully.
We just can't make you happy on the money supply. I mean, there was a time where it was growing. So, hey, Phil, what's going on?
Yeah. Well, the money supply exploded, at the pandemic, March 2020, we had the biggest explosion of the money supply that we'd ever seen, in 150-year history. And that's why I had predicted we're going to just have a lot of inflation. But then 2 years later, Powell stopped it, and it stopped the inflation.
You're never happy.
But you cannot decrease it. Yeah.
You're never. Yeah. We had too much money supply. Now we don't have enough. We got to get it just right. So Jeremy, right. I mean, you really want them to. It's already almost 2024. You're talking about first quarter. What month in the first quarter do you want the Fed to actually cut? Because we just had a 5% print, 5% plus on GDP. That just doesn't. People that aren't watching it that closely can't imagine that we already need to cut when and what's unemployment? It's
remember that as you said, Joe. I mean, that's July, August, September. That's really history, 5.2%. And as you said yourself, I mean, the Atlanta Fed just lowered this quarter to 1.2%. That would be the lowest quarter of this year, and that's if we have a decent Christmas. We'll see whether the sales hold up. So we've already decreased by 75% the growth rate from that third quarter. And, we'll take a look. I mean, we got a lot of important data this week. Certainly the employment report on Friday probably will show growth because we've got workers coming back from the UAW strike. But if that unemployment rate goes above 4%, we trigger rules that have said that unemployment rising 0.5% from its low mean that the likelihood of recession really increases dramatically. So we're not totally out of the woods on that score yet.
Well, I just wonder there's what you want to happen, what you think is going to happen. You think the Fed is going to have we saw what happened on the way into this in terms of staying out of raising rates for too long. Do you think they're going to stay too long? You think they're going to be stubborn about cutting rates?
That's the worry. I mean, they were way too late on raising. Are they going to be, I hope at this meeting that Chairman Powell will finally acknowledge we're talking about it, not that we're doing it, but we're talking about, which you remember in the November meeting, he actually ruled, we're not even talking about lower. They should be talking about it, not that they're doing it, but that should be, part of the conversation, given the softness of the data that we've honestly seen over the last 4 weeks. Again, I'm not saying, recession is inevitable on the horizon. I'm saying they've got to be two-sided. They've got to talk about it. They can't be anywhere near as stubborn as they were on raising rates as they will have to be on lowering rates, I think, in 2024.
If they cut, will we have a soft landing? Will they actually be able to?
That's the biggest
land that plane perfectly, a 3-point landing.
It's the biggest chance for that soft landing, which they desire, in my opinion, if they cut rates, it's totally different than the 1970s, where, you know, as I had mentioned, money supply went up every single month during that decade. We don't have that situation. They don't have to worry about sparking another inflationary cycle. That's gone. They really do need to start thinking about getting money supply up to a reasonable level that sustains growth in 2024.
If, let's say they don't cut till third quarter, fourth quarter, you figure that means a recession, and that means that the market does what? It stays flat?
Nothing. I mean, outside, very honestly, I think outside the Magnificent Seven, the market is almost priced for a mild recession. I mean, we take a look at small and mid-cap stocks selling 11, 12, 13 times earnings. That's mild recession levels already. So I don't, you know, yeah, there'll probably be a decline in the market, but it's not going to be a big decline if they make a fatal mistake. So on the downside, I think, you know, you would probably have 5, 6, 7%. On the upside, as I say, I think 15 or 20, they start lowering it, get that money supply up. 2024 could really be an excellent year.